Welcome back, traders and investors. We have a very special guest on the line today, Paul LaMonica. He's the digital correspondent at CNNMoney. He likes to write about the markets, economy, and technology, and also appears in the Daily Buzz video. Paul, how you doing this morning?
I'm good. Thank you very much for having me. Appreciate it.
Okay, so let's just talk a little bit about a digital correspondent. How long have you been doing that job, and the time that you've been doing it, how much have things changed?
Oh, things. Well, this is I've been at CNN Money for almost 13 years now, and covering financial news for almost 20. So definitely a lot has changed in those past 2 decades. Seen a couple of bull markets, a couple of bears. It's been very fascinating, though, when you go back to 1995 or so, I guess, when I first started. If you'd been invested in the market since then, even though you would have had a lot of headaches and some kind of gut wrenching periods of volatility, you'd still be ahead of the game.
How much has social media changed this market? Like, there's so much information out there. If you go back to 1995, people really had to dig to try to find the information. Now it's thrown at you from everywhere. What do you think? How do traders how do they decipher through all this information and not get into information overload?
It is a difficult thing, I think, right now, because there is just an amazing amount of data that's out there and opinion. Some of it's good, some of it is not of great quality. But I think in all, it is nice to have the market seem a little more democratized, if you will. And I think also, I don't know if it's just that the bear market of 2000 and then maybe again 2007 maybe shook out some of the people that had been treating stocks as more of a game as opposed to an actual real career or something as a passion. I find now that when you look at sites, like Twitter, like StockTwits, and you see people that are talking about stocks, it is more intelligent, even within 140 characters, than the old late 90s message board days, where if you go and look up a certain stock, I mean, if you were dared to question Cisco's triple-digit PE in 2000, people started flaming you as if you were, talking blasphemy against the Roman Catholic Church. Then you also had all the political stuff that wound up on message boards as well. I mean, the filtering was terrible back then. So I find that now the conversation is a lot more focused and a lot more sound and intelligent.
The one concern I have, and I try to talk to traders about this too, is if you're looking through all this information, you can kind of always find what you want to. So sometimes you get a trader, they'll make a position, they'll take a position, and then they'll go try to find somebody else that has the same position to make them to confirm their own initial thoughts. That can be dangerous though, because if you're always looking, you can find what you want. You're not going to probably get the information the best use of the information out there.
Yeah, I think that's a great point. It is something that I think can be a dangerous trap for a trader or even a long-term investor to fall into. You should not, if you were looking or considering going long or short a specific stock, you definitely don't want to just associate yourself with the people who are validating your opinion. I mean, a lot of times I find in researching stories that the best comments that I get are from people who question, a perception that you might have, because oftentimes you do more digging and you realize, oh, okay, I hadn't thought about that, and that is something that needs to be considered, as either a risk, or if you've been thinking about something as, I would definitely never buy this stock, then you see why there are maybe some more opportunities than you might have overlooked.
Paul, I mean, the time that you've been covering the markets there for CNN, I mean, there's been a lot of changes, not only in like the social media, but the markets have become so global, and just for example, S&P futures are trading around the clock. You follow the markets, the economy, technology. I mean, obviously with these 24-hour markets, you can't be in front of your screen all the time. Do you have like key indicators? Like Dennis and I really like to focus on the S&P futures, and we're very technical. What is your kind of like your go-to indicator, or do you like to rely on the charts? Do you just stick with the fundamentals? What do you find yourself relying on?
as someone who is coming at it more from the lens of as a writer, a reporter, journalist. I mean, I do have a couple of small investments that I disclose, my column, but I'm not doing trading and investing as a career. Just as someone who's writing about it, I would say that it has to be a mix of both. I mean, you can't completely dissociate yourself from some of the technicals. I think, though, just from my vantage point, the CNN Money readers, I think, are more interested usually in the fundamentals about what's going on with specific companies. But you do need to have a mix of both. I mean, I'm going to be writing a story later today about how Apple and ExxonMobil are the two largest, most valuable companies in the world. There's this statistical quirk right now that both of them trade for almost the same share price. That obviously doesn't mean that they're the same value, both at around $100. So I'm going to kind of explain, which one at $100 makes more sense as an investment by looking at the, earnings growth, PE ratio, dividend, things like that.
When you're putting together the BuzzFeed there, and you do this every day, the BuzzFeed?
The Buzz column, yeah.
Yeah, the Buzz column.
I do a video story every day. We have two usually on the site. My colleague Christina Alessi also does a video as well.
Now, and you take a lot of that and you look at StockTwits and you look at Twitter. Do you have like some go-to guys that you go to on StockTwits, some good ones that you think, or do you kind of just decipher through, like if you're talking about a specific stock and look through a lot of the messages? Like how do you get through all the clutter on StockTwits and Twitter?
Yeah, it is difficult. I usually go, though, just kind of ticker by ticker. I mean, there are people on StockTwits and Twitter who I follow pretty closely. I mean, it shouldn't come as any surprise. A guy like, Josh Brown, the reform broker. I mean,
right.
In addition to being ridiculously funny, is a very smart guy, and I really respect him and his colleague Barry Ritholtz. So those are two, in particular. But really, I find that the best thing to do is to just kind of scroll through as quickly as you can the actual ticker feeds themselves, and not just focus on a select group of people that might be writing, because you don't want to you don't want to miss out on someone.
Just going to the overall market here, you've been following the some of the bull, some of the bear markets here. Obviously, this bull market has been instigated a lot by the QE, and all the fundamentals are just pointing this market going higher and higher. Just looking back, like in 2008 when the market wasn't quite as on a bull run as it is now. Are you seeing anything out there in the fundamentals or the technicals, or in social media that makes you think that this thing's going to be turning around, heading south anytime soon?
It's tough. I mean, that's obviously the real question that everyone wants an answer to. I don't get the sense that there is this impending doom. Partly because a lot of people are very skeptical right now. Anecdotally, you hear about money still being on the sidelines, and I've talked to a lot of managers and strategists who have referred to what's going on as one of the more hated bull markets in history. And I do feel that there's a big difference now between the late '90s, when you had a lot of people, as an amateur, talking about stock market. People are very interested, and I think now you really don't have that same level of retail interest, and I think that potentially might be a reason why the market could go higher. I mean, I think eventually you're going to have to see more money coming out of cash and coming into stocks.
Okay, and just for like the average investor here, I mean, there's a lot of different ways to get information about the markets, and I mean, the Wall Street Journal's still around, and obviously Barron's is something that I read, and to get a big longer term perspective. Besides, your column and what you do on your video, do you have any recommendations for investors? I mean, there's the Twitters, the stock twits. Is there any books or investors you think people should keep an eye out to follow the markets on a daily basis?
Yeah, I mean, honestly, I think it really begins and ends with kind of understanding data. I mean, a lot of people will talk about the classic. A Random Walk Down Wall Street is a great book. I mean, you go back even further to the value investing kind of Bible that Graham and Dodd are known for. But I think really, even though it may be difficult to do so at times because it is a labor-intensive task, the biggest thing I think that any investor, both amateurs and obviously pros, should do is you really have to look at the kind of primary source material. So SEC documents and earnings releases are usually very rich with information that the average investor. A lot of times, I think the best thing you can do is when you're looking at the numbers, you can really get your sense of what is going on without having spin from an executive or an analyst or a fund manager. I mean, obviously, I love talking to people as well, but the numbers really, as cliche as it sounds, don't lie. So going through SEC documents is a very important thing, I think, for any investor to do. I mean, traders, obviously, you're looking more at kind of the charts. You probably don't really necessarily need to care about what's in the Alibaba IPO filing. But if you are thinking about putting serious money in Alibaba as a long-term investment, if you don't read the registration statement and you're just relying on press reports, I think you're really doing yourself a disservice.
Okay, we've had Paul LaMonica on the line. He's digital correspondent at CNNMoney. You can watch for his tweets on Stock Twits and Twitter, as well as his daily Buzz video segment. Paul, thanks a lot for coming on, and we hope to have you on back again.
Thank you very much. I appreciate it.